Welcome back. You're still tuned into Halftime Report. Well, India's IPO market hit an all-time high in 2025 with 103 main board IPOs raising around 1.75 lakh crore. The total M&A deals also the deal value surged around 91% as well. To discuss the entire IPO setup in 2026 and whether the M&A boom will continue as well, we have with us Mr. S. Ramesh, the MD and CEO at Kotak Investment Banking. Mr. Ramesh, thank you very much for joining in and wishing you a very happy new year. I'm going to start with that. Is it going to be a very happy new year for the investment banking vertical, at least when it comes to the IPO space? It's expected to even surpass what we've seen in 2024 and 2025. There's a strong list of contenders already waiting in line. Just give us a sense in terms of what the pipeline is looking like.
Before I answer the outlook for 2026, both on advisory, M&A and IPOs, we'll just take a quick look at the rear mirror to see what was there in 25. Investment banking activity saw a very robust regime in 2025. But I would say that contrary to popular belief, the M&A space advisory deals actually saw a surge. We ended up doing close to about 121 billion deal values announced. The other call out is that many of these transactions involved listed space, and one particular sector saw an advent of a lot of deals, which was the financial sector, the FIG sector. When it comes to M&A, contrary to popular belief, there was actually a marginal decline in the volume in 2025 as compared to 24. Overall fundraising from all formats was around 5 lakh, a little around 5 lakh crore as opposed to 6 lakh crore in calendar 24. And I would just make one special call out that these by itself really place India superbly in the global space on the overall value of deals done. And the call out I would make is that all of this would not have been possible, and this is the feedback we have got from foreign companies and international investors, that the regulatory regime and the Indian regulator of the capital markets has done a fantastic job in nurturing the capital markets, which has encouraged this kind of activity. When it comes to calendar 26, just basis some fine estimates that we made quick and dirty, we think Indian capital markets should go back to roughly the levels of calendar 24 through various formats led by IPOs and the sell-down activity. And M&A, we expect the robustness will continue, because if you see the last 6 months of calendar 25 saw deal values of around 70 billion getting announced. The run rate is very healthy. And we expect that that should go to about a 130, 135 billion in calendar 26. The FIG sector stood out in the M&A space as well.
Yes, Mr. Ramesh, actually, when you spoke about talking about 2025, Mr. Sanjeev Prasad from the Kotak Group himself indicated that we've raised over $100 billion, but only 15% has gone to capex or something that would generate wealth, right? Do you think that could be, of course, fundraise is good, liquidity is there, we are seeing the regulatory regime supporting us as well. But do you think this is something which could be a risk going forward as well? While FII is talking about what the regulator has done really well, but it not going back into the capex cycle could be a risk going forward to fundraise?
No, I don't believe that is the case, because you have to put this point in perspective. I think if you look at Indian companies, and particularly new age companies and a number of other Indian companies, the last 5 to 8 years, you have seen the advent of many of these corporates taking private capital. So at the risk-taking stage, they have actually been taking private capital. They have fixed their governance models. They have fixed some of the chinks in their business model. And they have now coming to the capital markets at a little more advanced stage. So that's the advent, which is the reason why you're finding that there is more offer for sale in many of these companies as compared to new capital. So it's okay, because in a way it also plays safe for the capital markets. So I wouldn't be unduly concerned about this narrative. In particular, if you look at 2025, new age companies dominated the capital markets. And if you look at the returns they have provided to investors in their IPOs, it's close to 36, 37%. which is significantly higher than the broader average of all IPOs, which is more close to 12%. So therefore, I don't think we should be unduly concerned about this.
Right. Sir, what I also want to know is, we've seen a lot of this PE capital come in as well during this time. How do you see 2026 on that front as well? And how should we watch out for in terms of sectors?
Yeah, so I would say that the trend we are seeing in the end of 24, and particularly we saw that in 25, strategic investors, which is the Indian corporates, foreign multinationals, as well as the PE investors are now broadly competing for investments in the M&A space. So it's a combination of all of them. And the PE investors have continued to be very robust in their investments in the last few years, particularly even taking control deals wherever they need to. So I see that advent continuing, and I mentioned that I expect the overall M&A volumes to go to about 130, 135 billion. We have seen, while FIG was a common sector across the capital markets and M&A, we have seen that India has had diversified sector activity across the capital markets and M&A. I expect that trend to continue. We will see consumer and internet consumer having activity on the M&A space. We do see industrials having space. So it'll, and of course the whole IT and IT related sector. So I see a little bit of a broad, diversified set of activity, not a single call-out sector that is likely to dominate in 2026.
Actually, that was my next question, Mr. Ramesh, because, we ended 2025 with the two big deals that took place. One was Shriram Finance as well. And the other one was the deal with Coforge and Encore, which took place. You're not expecting it to be sector specific. What is your sense in terms of what we can see in terms of deal activity when it comes to finance as well as tech?
No, we based on conversations with various clients, well, I would not like to predict it only for calendar 26, but if I take a broader landscape, the two sectors that you called out, namely FIG as well as IT and IT related, we are hearing conversations of interest from various strategic buyers, including PE investors. We expect those conversations to continue. We expect, as I mentioned, the industrial sector to have robust activity, manufacturing and industrials. The consumer sector, we are seeing a lot of conversations, both in capital markets and M&A. So these are a few sectors where we are seeing more prominent conversations. But as I reiterated some time back, we expect the broader play to be in the next 12 to 18 months to be more broad-based.
Okay, all right. Always a pleasure speaking with you, Mr. Ramesh. Thank you so much for joining us with your insights and expert comments on what we can expect in 2026. You mentioned 2025 was good, but it did see a decline from 6 lakh crores to 5 lakh crore rupees in 2025 on a YY basis. So we'll keep that in mind and look out for any more deals that take place across the spectrum. That's the word coming in from S. Ramesh from Kotak Investment Banking. With that,